I would like to welcome everyone to World Energy's interview with Jeff Johnson, CEO of Epis Global Energy. I'm Richard Loomis, CEO of World Energy, and I'll be your host today. Jeff, it's been a while since you and I have talked. I really appreciate you taking the time.
Oh, absolutely, Rich. It's good hearing from you again. I hope all is going well, and look forward for the discussion. Who would have thought just not that long ago that we would be where we are in this process? And one thing that I ask myself is, regardless of who ends up winning the election, what does it mean for me, my family, my business, and our investors? So hopefully we can answer some of those questions today.
Well, absolutely. Today we're going to talk about the politics of an election and its likely effect on the oil and gas industry and possible effect on oil prices. But, before we jump into that, can you give me the 2-minute version of what you're up to at Epis?
Yes, sir. So, Richard, we started Epis 6 or 7 months ago, and the primary reason was we think that there is a market disconnect in a niche that we can take advantage of, and where we can buy some high-quality assets, oil and gas producing assets, that just happen to be in what we call a bad situation for the business. So, by the model that we have set up and that we are pursuing, we're looking to go directly to the investor, either through an advisor or directly to the investor, let them invest at the asset level with us, and distribute the capital directly to those people. So we believe we can buy some really good assets in this price environment, provide a good yield, and when prices go back up, sell the assets for about twice what we paid for it.
Sounds like fun. Okay, well, let's dive right in. Jeff, my goodness, since the polls are showing about 50-50, how would you compare a Hillary energy strategy to a Donald Trump strategy? And what are you telling your unit holders today?
Yeah, well, Richard, it's interesting. I'm 51 years old, going on 52. And for the first time that I can remember in an election, for a presidential election, that there truly is two different paths, the way they want to take in all aspects of this, but particularly an energy path. And we'll start with Hillary. Hillary, I think, wants a continuation of the Obama policies. She will make no argument about it. She is anti-fossil fuel, and she'll tell you that she's trying to put the fossil fuels out of business. And she's very pro-renewables and green energy. Matter of fact, she's come out and stated that she believes that that her goal is to get to 25% renewables by 2025, which is pretty aggressive, if possible at all. I would argue it would not be. But in any event, those are her policies. Try to get this country to as quickly as possible to a renewable clean energy and completely do away with fossil fuels. On the other side of the coin, you've got Donald Trump, where Donald is going to be pro-business. He says he's going to lower some taxes. He's going to reverse many of the Obama policies, which include freeing up state lands, federal lands for drilling and development. I think what we could expect is less regulation, freeing up lands to drill more wells. And I think with Hillary, you're going to look at trying to produce less coal, drill fewer wells, possibly and potentially even trying to get a ban on fracking. And if she gets the House and the Senate, and if she gets elected, that's something that one needs to consider. So here's the thing. If just the threat, I think, of another Clinton administration coming in could reduce some drilling quite a bit. I think with Trump coming in, I think he's going to allow us to get back into the drilling phase quicker. With that said, it should bring on more production. It should help the economy, boost the economy, and thereby, in either scenario, I think you can see some good stable oil prices under Trump, and probably with the Clinton, if indeed she does try to reduce drilling. So it's bad if you're a driller, but if you own production, if you own barrels in the ground, it's good, because I believe prices will rise either way.
So to summarize, I think what you're telling me is that if either one is elected, there are pressure that would put oil prices on the rise?
Could be, yes. And I think more so than that, as much as anything, would be basically worldwide supply and demand with the amount of capital that's been cut over the last 2 years. Drilling rigs are off by 75%. and just lack of capital. But absolutely, if you're trying to shut down fossil fuels, we're a long ways away from being able to replace that. At the same time, if you will take the regulation and lower the tax burden off of American manufacturing and American oil and gas companies, you're going to see this economy expand. You're going to see it grow, and I think in either environment, it could be positive for those that own hard assets in the oil patch.
I find that interesting. I mean, we're looking at well, I know. Well, you watched the same three debates that I did. These are two very different approaches to what our country should be doing. And while they didn't specifically address energy, they certainly showed us a different approach between the two. After the election, what do you think happens to the price of oil?
Well, I'm not going to, short term from day to day, week to week, I don't have, I don't know. But I will tell you this, regardless of the election, I think you've got a path to where of profitability, if you will, in the assets that we're buying. So first of all, at the end of the day, it's going to be based upon supply and demand. And if you take a look at the world production chart over the last 5 or 6 years, from when we saw world oil production increase by about 5 or 6 million barrels a day, and that's why prices have dropped so much. Is we have been pretty stagnant, been staying around 91 million barrels a day up until actually whenever we started drilling and fracking here in the U.S. with our Bakken and our other shale plays. During that time that we saw production rise about 5 to 6 million barrels a day, if you take a worldwide chart and put all the production in the world on that chart, you will see that production rise. Take that same chart, pull out the North America, the United States and Canada, you're going to see if you clump the rest of the world together, it's basically flat. So virtually all of the production growth came out of the United States and Canada, with most of that coming out of the United States. Our drilling rig count has gone down 75%. Our CapEx has gone down, our capital expenditures has gone down 75 to 80%, and our domestic oil production, reached a high of 9.6 million barrels a day at the beginning of 2015, and we're down to 8.3 million barrels a day now. And there's 2 price points that count. To me, there's only 2 that count. What's the cost that you can go drill wells and still make a profit? So particularly here in the United States, since that's where most of the lift comes. So what price do we have to have so people will go take a risk to drill wells? And the other side of the coin, at what price point do consumers quit buying as much fuel? And the opportunity I see is at these price levels, buy the asset. We can buy oil in the ground for about $15 a barrel, and then it costs us about another $10 a barrel to get it out of the ground and sell it. So effectively, if you could go buy a barrel of oil for $15, set it in your garage, let it sit there 2 or 3 years, and when prices go back to 80, we can sell it. And while you hold it, while it's sitting in your garage just sitting there, you can make an 8 to 15% yield. Would you do it? And I'm highly confident that we can do that. The one thing I can't tell you is what oil prices will be at, but if you think the probability of them going up is stronger than the probability of them going down, then there's a real market disconnect, a way that we can offer good solid yields with exposure to the upside of oil prices. So I know that's not exactly what you asked, but that's kind of a long answer for your question.
It's interesting. Actually, we have a question coming in from our audience, which I'd like to jump to. The question is, if we see oil prices go back down, how will it affect what you can buy?
Yeah, well, as prices go lower, obviously the price to buy will go lower. However, the one thing you got to keep in mind is whenever you're buying in this market, it's not a whole lot unlike real estate. You're going to pay a multiple, and so the lower the oil price is, the lower price you pay. But you're still going to get, you're going to buy on somewhere between a 5 and 10 year multiple. So you're going to get, those rates of returns. To me, the lower prices go, and the more that you can buy at a lower price, the far more upside there is. Again, we're not depending on drilling to improve our returns. We're not depending on much of anything other than taking our rise with the price of oil. So the type of assets that we're buying, we're talking about, Richard, we're going to look at assets that have been producing for years. So we know what they've been producing for a number of years, and based upon models going forward, we can tell you what we believe they're going to produce for the next 20 or 30 years. And we've got historical expense ratios, and so we know what they have been, and so we know probably we got a high level of confidence what they're going to be going forward. And so as you do that, and if you can buy at a current yield that we're talking about, for every dollar that the price of oil goes up, the yield will go up about 1%. So the lower prices go, the better buying opportunities if you can find the right assets.
I have another comment from the audience. You mentioned earlier in the interview that Hillary is anti-fracking. If she were to come in and ban fracking, doesn't that make investing in oil and gas more risky?
Well, it's interesting. Depends on where you invest. And I wouldn't say it makes it more risky. It just sure eliminates a lot of the opportunity to invest. If you're a drilling company or if you own undeveloped acreage that you're going to drill, you're probably not going to get the drill. If you own production that's already producing, then you're good to go and you ride the prices up.
So to clarify, if she were to ban fracking, but you own current production and are not fracking, you would take advantage of the price rise.
Correct.
Interesting. With where we are today, where we have this uncertainty between whether it'll be a Donald Trump or a Hillary Clinton, and of course you've got an overheated stock market and you've got the Fed making noise that they're going to raise interest rates, how does oil and gas really help investors during this period?
Yeah, to me, I don't look at it so much as oil and gas as I do. I just happen to be in that business. I have been my whole career since 1989. I just happen to see an opportunity out there that there's no yield in the market. A matter of fact, I have a friend of mine. He's in the partnership that came in and said, the yields are so bad up there that people are bidding up real estate prices to where we're making a 3 or 4% cap on real estate. So you have, in some cases, negative interest rates in different parts of the world. Here in our country, I don't know, about 1 or 2% or even less than that. And so people that are looking for a portion of their portfolio to provide yield, to provide income, this is a time that I don't ever remember in my lifetime that doesn't exist. Real estate has always been a safe haven and still is, but because your typical, for example, MLPs, their equity was wiped out, so they are not paying any yield anymore. Stock dividends, because there's no other way to make interest rates, their yields are reasonably low. And then if you look at your typical bonds, whether they be government bonds, corporate bonds, yields are very low. You can go into some junk debt. And again, there's a handful of assets out there, but where there's truly a disconnect that I haven't seen before in this marketplace is to go look for small assets, let's say less than $20 million, that the large money will not chase because it will not move the needle. Go and be able to buy those on a multiple that you can normally buy in any other market and hold it. So it just happens to be oil. And the reason that I like that is because we're also sitting here at $40. And we can talk about hedging strategies and those sort of things, but you can provide a hedging strategy where you can put a floor on, hold the assets, and for every dollar that the price of oil moves up, your yield goes up and the underlying value of the asset goes up. And I don't know of too many things in the marketplace right now, to your point. Stock market's trading at pretty lofty levels. Yields are at very low levels. So where can you go get a high yield income that as the price of a commodity goes up, so will the value and your income? And I just think it's a tremendous opportunity that probably won't be around real long. But as long as oil prices can remain in this price environment, then there will be some opportunity that we can take advantage of.
If we actually are looking at an election where we don't know which direction this is going to go, but I got to ask, in your opinion, which one wins and which one's better for energy?
I don't. I've got my opinions on which one's better for energy. We do need to find more renewables, more green energy, but the market is a good place to handle that. So obviously I'm pro-business. On the other side of the coin, if Hillary gets elected, I think it could create some stress, not only on domestic oil production and on domestic drillers, but stress on oil prices, which indeed will end up being another stress on the economy. So if that happens, you'll want to be owning oil production.
Well, Jeff, this has been very interesting, and I really appreciate you taking the time today to have this discussion.
Okay, thanks, Richard.
The next time we visit, the election will be over, and we'll see what the reaction really has been. Tune in every first Thursday for our conversation with Jeff Johnson, a 30-year veteran of the oil and gas industry, former CEO of Kano Petroleum and energy expert, and current CEO of Epis Global Energy. I'm Richard Loomis, and thank you very much for listening.